Good morning, folks, and welcome back to Almus Market Mornings. We start the new week with the strongest amount of optimism for the markets because this time both US and Iran have reached an interim agreement that will result in halting of the war and in the opening of the Strait of Hormuz. Officials from both the countries will meet in Switzerland on June 19th to formally sign the agreement, which will open pathways to further discussion towards a final deal. Interestingly, the Iranian side's commentary is that it forced the US to sign this deal and it conveys a narrative of victory. Markets, of course, have taken this development with both hands. Risk sentiment has gotten a big boost. Asian equities are having a good show. Both Japan and Korea are up 5%. Dollar index has seen a fall, and rupees trading strong below 95 levels. Uh, Good morning, JK. What's your sense of this development? Of course, there are some very thorny issues like straits control and the nuclear issue, but it definitely seems like a step in the right direction. What do you think?
Good morning, Swaraj. Good to see you back. So I think this is a memorandum of understanding. It's not a peace treaty at all. So there is a certain outline of what Iran has to do, what US has to do, and the thorny issues obviously is going to be negotiated during the 60-day period that's been mentioned. The MoU, the limited agreement, is going to be signed on Friday in Geneva. As you said, the thorny issues of the nuclear enrichment is one which will figure in the discussion in the coming days, as well as how the Strait of Hormuz will be allowed to freely operate, because Iran says they will be opening it, but it will be under their supervision, and in fact, their supervision along with Oman. So that's something we need to take note. They're still having some control, so they are going to open it. Um, so definitely, as of now, there is a relief for oil, and we have seen oil prices fall by about 4% in Asian trade, continuing its fall in the last week also. Uh, and frozen assets, some 25 billion of frozen assets will be released by the US for the time being, and other the sanctions will be partially lifted, so there can be flow of oil from Iran as well. That's what has been broadly agreed upon. uh, it's not clear exactly when the state will be open. That is something that even the US people are not agreeing to. I think the next few days before the actual signing of the MoU in Geneva, I think some of these things are going to be said. But I think market is going full hog optimism, carrying on from what we saw last week. So we have rallies in everything, equities, currencies, and of course the bonds as well. Yields are down. And last week, of course, we also had the SpaceX IPO successfully launched with prices ending with good gain for those who are allotted. So overall sentiment is upbeat as of now. We will, of course, now get into the brass tracks where the negotiations will actually happen on key issues in the coming days. And yes, for now, we are in the positive environment. Uh, no, this agreement could not have come at the right time, better time for FOMC, because they're meeting in next 2 days. And based on this and the negotiation that will happen in the next 1 or 2 days, FOMC might well get some foothold to say that they'll take a wait and watch approach, because there is already a feeling, at least in the new chairman's view, that transient factors for inflation should be ignored, and therefore the median should be adopted for guidance on the inflation. So that, as I said, if oil price is below 80 in the coming days, I think Fed will definitely continue with the wait and watch approach. Whether they will remove the easing bias or not, that is something that we will see. There's one more rumor floating around, is that US Fed will stop publishing the dot plot, and dot plot has been one of the things that market looks forward to every other meeting. because that indicates individual members' views on how the rates would be going forward. Again, the new chairman also is of the view that we have to be less communicative, or rather, we should not be over communicative with the market, and that puts that ties our hands, and therefore, uh, possibly we will have some projections on economy and uh, projections on rates will be guarded. This is the feeling I'm getting. But as of now, I can say that they are going into the meeting with some positive view, and again, market ignored all the higher numbers on CPI and PPI. Now that looks justified, because once the oil price comes down, the headline inflation is going to drop, and of course, it may even have uh, positive impact on the broad-based inflation as well. Dollar, last week looked like it's going to break 100 and stay there, but again it failed. I had 100.50 and then now below 99 and a half, and euro is back above 1.16 as well. So we are still in that range as far as the dollar is concerned. Interest is surrounding the yen, where Bank of Japan will be publishing their interest rate decision this week. 0.25% hike is fully discounted. Whether they make a hawkish statement or do they surprise the market with a 0.5% hike, which is a low probability. Hawkish statement is one that we could see, and how is yen response to this is important. Yen would more likely respond to lower yields in US rather than on any statement by Japan, because they have taken such a long time to hike the rate from 0.75 to 1%. I mean, they're taking. So yen bears will still continue, particularly if the risk sentiment remains positive. They'll continue to sell the yen as well. Commodities have recovered smartly, particularly gold and silver. Gold was almost breaking 4,000. Now it is at 4,300. Silver is up about almost 12 to 14%. So that's a good recovery, all based on positive sentiment that's ruling. India, last week we had the retail inflation number coming at 3.93%, still below the 4% median mark for RBI's inflation target. And although there is a sense that even if the oil prices come down further and headline inflation gets a relief, the domestic vegetable prices and food prices are rising with scanty rainfall so far seen. There is a fear of delayed as well as deficient monsoon, which is likely to affect the domestic inflation, and that's the fear that impact inflation as well as the growth consumption. That's something that we look ahead to. As of now, of course, rupee is still range bound with a slight strengthening bias. We have not seen the kind of rise that one would have expected after the announcements of measures by government and RBI in the previous week, but it has traded around 95 to 95.50 broadly, and today it looks like it's going to trade below 95. One important development last week has been that uh, FIs have bought into Indian bonds in good measure, almost $1.4 billion, and the freely accessible route where there has been an expansion of more securities to be included. And equities saw some amount of selling. So the net flow was negative, but not very significant. Now with the latest development in global markets, if they sustain, could see flows improving further. Nifty also made a good solid base ahead of 23,000, and we had almost 2% rally on Friday, likely to be extended today. So there's a sense of stability in the Indian market, both on the bonds and the stock market. So it should help FIs flow, which has been missing for quite some time. But we'll wait and see. Rupee, of course, I think now 95.50 is probably giving a good cap for the spot rate. At the same time, the move lower is also going to be gradual. It's not going to be a big slide because we still have important interest on dips. All in all, starting the week with much more optimism than we have seen in any of the previous weeks in recent months. Thank you.
That's right, JK. A lot of optimism this week as compared to what we have seen in the last couple of weeks at least. Because this time I think there is a lot of confidence that this is going through the MoU. It's not a peace deal, but a MoU. It will outline what US will do, what Iran will do, and this MoU will be signed in Geneva. Post this, there will be a 60-day period to resolve, the issues we have been talking about, the nuclear issue, and who will manage the strait. All these are very significant and sensitive things that will take some time to resolve. Meanwhile, for markets, a lot of optimism. Equities doing well. The yields are down. Precious metals are doing really well. They have recovered quite significantly. Gold is near 4,300. On the currencies front, dollar index, which seemed like it would break 100.5 last week, again opened lower. Euro is back again above 1.16 against the dollar. And of course, there's a lot of interest around the Japanese yen. A 25 basis point hike by the BOJ is being discounted for this week. We also have the FOMC this week, where they may adopt a wait and watch kind of approach. Rupee has a range bound to strengthening bias, and that's about it. We should be doing well, as also seen by the Indian equities. That's it from us today. Thank you for listening. We will catch up tomorrow with a fresh round of updates.